So, the strategy is actually about building our foundation and further strengthening it, right? So, it's about growing meals and it's about becoming a more relevant omni-channel brand, which we already are today, but further building on that. So, it's about growing AUV for us. I think our strategy has 2-3 levers. The first two are around growing AUV, and the third one is about growing our network. So we're going to use meals and ensure that we continue to cement our market leadership during this category, during this day part, because consumer spend is going to be focused more towards this day part. And we're also going to ensure that we offer a great experience to our customers across all our touch points and hence be a truly omni-channel brand. And as a result of that, grow AUVs. And finally, we're going to grow the network by ensuring that our brand relevance and product market fit continue to grow and use our real estate competitive advantage to grow our network faster than ever before. We've identified opportunities in the south and small and emerging towns where we plan to penetrate faster and have a larger presence.
So, small and emerging towns, you highlighted that part. Obviously you are looking at, increasing your stores also to 580 to 630. That's also almost double again from, the current levels that you're looking. 337 is what was there in Q2. So, in terms of that, then would you be making more investments? Will it be through internal accruals or will we be raising some capital? How is that store expansion going to work out for the company?
So through our Vision 2027 and our volume growth, which we plan to convert into strong profitability, in fact, plan to generate 18 billion rupees in cash flow and invest roughly around 14 billion rupees in capex. So I think our expansion plans will be well funded through our internal accruals, and we'll continue to maintain a strong balance sheet and capital efficiency like we always have.
And then what about your expansions? Will it be more of further into the smaller towns, smaller cities, where you're saying you're seeing good growth coming in? Is that the more of the focus area, or is it going to be, in bigger towns, metro cities as well? So a horizontal expansion plan or more penetration and a vertical expansion plan?
So network expansion for us is actually about identifying the right markets, getting the right real estate through our capabilities, which we feel are a competitive advantage for us. Real estate is, extremely challenging, but for brand McDonald's and Westlife, it's been extremely rewarding because of our real estate competitive advantage. So we've identified a couple of markets like the south and smaller and emerging towns where we plan to penetrate faster and expand our presence and make it larger. But at the same time, we're going to continue to grow our market leadership in the west and other metros and larger towns. So holistically, we're going to be, available in all our regions. But we're going to penetrate faster in the smaller and emerging towns as we've seen urbanization really support momentum.
Okay, and just want to understand in terms of, the revenue per store. FY16, it was 3.9. Currently somewhere around 6.3 to 6.5 crores is what we are seeing in terms of revenue per store. Going forward also, when you just compare it, you're expecting a 4,000 to 4,500 cross sales and a growth of around stores of around 580 stores. So when I just divide it in just a math calculation, it comes somewhere around 6.8, 6.9. So, why are you, the level that we're seeing currently, there's not much of an increase coming in the next 5 years for the revenue per store. Why is that so? What is the strategy?
So, AUV growth is going to come across two levers of meals omni-channel for our existing base of stores. We also are adding a large number of stores to the network, which is roughly around 300. So as you, kind of expand and double the base, there's obviously, a catch-up effect that's involved. So what we anticipate is that our existing basket of stores are going to continue to grow faster. In fact, we shared color of our top 10% stores, having double the AUV of system. So we've shared what could be possible. But at the same time, we're also adding 300 stores to the network, which might take a little longer, to scale up the AUV. So as a result of that, we've landed at this target, which is around doubling sales, opening around 300 stores. And we're quite satisfied that this will help us achieve market leadership in a very challenging retail landscape.
Absolutely, and also just want to understand that in terms of your margins, yes, currently, when you look at margins, somewhere around 17%. I'm taking the whole approach of, Q2, it's 17% as of now. Going forward, you've given a target of 18 to 20% by 2027. So in terms of margins, don't you think we're being a bit conservative?
So actually, our current margin, which is pre-Ind AS, is around 13%. We're talking about, building that up through our P&L levers to around 15 to 17%. which translates into a post-Ind AS margin of 18 to 20%. It's actually, more an accounting kind of nuance, where as we're opening more stores and the leases are, increasing in terms of number of years, you're seeing the, Ind AS impact go down a little bit. Okay. So actually the number that's more important is from current 13% of pre-Ind AS to around 15 to 17% pre-Ind AS EBITDA margin as we move forward.
So from 13% to 15 to 17%. So that's 400 basis point expansion in the next 5 years. Given that the current volatility that we are actually seeing, you don't know when what is happening and the prices just increase for wheat or, tomato prices, onion prices, suddenly we're seeing them soaring. How does this actually work out, and what would be your strategy actually to, take control of that inflation? Because that is something that is unprecedented, unexpected. You don't know when it's coming.
So, it's all about long-term value creation, and hence profitability is extremely important, like you mentioned. So what we've done is, we've spoken about growing volumes, but at the same time, we want to convert that into profitability. We've detailed out some levers, whether it's product mix and pricing, whether it's cost optimization. And lastly, this volume growth brings in a lot of operating leverage for a brand like McDonald's. That's the beauty of the business model. And as a result, when you kind of add up these levers, you do see us kind of aspiring to reach 15 to 17% despite the inflationary environment, because line items keep going up and down. We have very strong governance across the P&L to ensure that we manage all these line items.
And then what about, premiumization? That factor also adds to the margins, because premium products will give you better margins. You'll have come out with your gourmet burgers, but then what is the strategy in terms of premiumization going forward?
So, we've done a great job in making sure that we become and remain a modern, progressive brand. I think platforms like gourmet burgers, McCafe, also becoming a chicken leader and maintaining that leadership is allowing us to make the brand aspirational in the eyes of the user. I think we're going to continue to kind of double down on these platforms and ensure that, our stores are also extremely modern. We're talking about 100% modern stores by 2027 as we keep them digitally enabled and so on. So, we're very confident that all these initiatives put together will allow us to deliver on our vision of being a modern and progressive brand.
Okay. And, just want to understand in terms of, obviously, your delivery dine-in. You did mention that, it's a significant part is now delivery. Could you just share with me how much would that be, the significant part, like now delivery?
So we break it up as on-premise and off-premise. Off-premise for us includes delivery, drive-through, and other off-premise channels, which are doing very well. And I think currently the split is around 55 to 45%. What I think is most important is actually growing the entire pie. In Q2, despite having a very strong delivery base from the year before, we still grew delivery and off-premise by around 12%. And on-premise came back, from pre-COVID levels to grow around 24%. So it's eventually about growing the whole pie. And because we're an omni-channel brand and our omni-channel strategy is so strong, along with our menu strategy, we've been able to grow the entire pie.
Also, I just want to ask, in terms of the current demand trend, what is the demand trend that you're seeing currently, whether it's in the west or the south, any specific trends that are actually coming out for you?
So you've seen, our Q2 was extremely strong. I think the momentum definitely is continuing. But in terms of demand trends, some very powerful insights are around the smaller and emerging towns, where you're seeing urbanization continue to grow and people wanting to spend at aspirational brands like ours. Secondly, I think digitization is becoming even more important. I think the government is doing a great job in ensuring that we become an extremely digitally sophisticated country. And because of our omni-channel strategy and our digital penetration, I think we've been able to take advantage of that. And our menu remains, aspirational and very, relevant to our users. So they love coming to McDonald's and having that consistent experience. So that's where we're seeing demand come in. And we're confident that through our strategy that we've laid out, we can achieve our Vision 2027.
Okay. And, just want to talk about, the chicken space. Y'all are there in the space, but y'all have given a furthermore highlight, especially in the southern region. Y'all are mentioning that we're seeing a good demand coming in there, especially for chicken products, coming out with chicken wings as well is what you're looking at. So then, there are already a lot of competition coming in over there, like KFC or Popeyes, which is there as well. How does that work out for the company? Because these are specifically for, chicken products.
So, in most of our region, actually, chicken consumption is high. And what's good for us is that we've built this leadership over a period of time in chicken, where we not only have fried chicken, but we also have chicken burgers and chicken sides. And globally, McDonald's is a leader in chicken. We have multiple iconic products. In fact, our fried chicken obviously has taken inspiration from the system, and we've launched, a locally relevant product. So I think that we have what it takes. We are chicken leaders, and in our region, we can continue to display that chicken leadership in the competitive landscape.
Okay, and McCafe, what are the revenue expectations, targets? What are you looking at? Yes, you all have said, you want 100% McCafe in all the stores that are there. So what is the revenue coming in from McCafe that we can expect in terms of contribution breakup then?
So we're talking about 100% McCafe penetration. McCafe has worked out very well. It's, made the brand again more aspirational. It's premiumized the brand. Our McCafe counters add to the look and feel of the restaurant. In terms of moving forward, I think we're talking about McCafe contributing around 15 to 18% as our target in Vision 2027. This is while converting 100% of our restaurants to McCafe, which basically implies that, when we add McCafe, we drive incremental sales, we add a new occasion for customers to come. And it just makes the brand more aspirational, since coffee drinking in our country, while growing fast, is still low. But it is a habit that's going to build, and hence we have a large opportunity in front of us.
I think it's already building. There is a coffee culture that is coming into India. And lastly, just a question for on the shareholders front. When you look at it, you said 1,800 is the operating cash flow you all are expecting by 2027. And out of that, 1,400 will be used for new investments or capex. So 400 will be left on your books, and you all are planning a dividend payout of 15 to 25%. This dividend payout, where is this going to start from now on? Gradually, maybe we will start seeing something coming in from this year, or is it going to be a vision that we could be expecting going forward?
So the idea is to, first give an idea in terms of network expansion, because what's important for us is to build our business. And I think we're going to use our cash flow in the right way in terms of capex for the business, and do what's right and open the right number of stores as we move forward, as we've always maintained through internal accruals. I think moving forward, we wanted to give visibility in terms of, as we develop a free cash flow profile, what we want to do with it. Dividend is one such initiative and possibility. We've given a flavor in terms of what our dividend payout policy could be, and it's something that we're working on. Primarily, we're going to start kind of using our cash flow to fund this aggressive capex, and as and when we get visibility and think it's the right time, we definitely will kind of put out a policy in terms of dividend and other forms of corporate action.